My name's Deepesh Patel, editor at Trade Finance Global. Today we're talking about the modernisation of the rules governing trade and trade finance in line with the acceptance of electronic documents. What does this actually mean though, and how does it affect market participants, and what does this mean for the fully digitalised future of trade finance instruments? Today we're joined by Geoff Wynne, partner at Sullivan and Worcester. Geoff, welcome to Trade Finance Talks. So who are you, where are you from, and what do you do?
Deepesh, hi, thanks very much. I'm Geoff Wynne. I'm a partner at the law firm Sullivan and Worcester. I head their London office and I head their trade and emerging market finance practice. And consequently, I've been involved in quite a lot of the rules that I think we're going to be discussing.
Yeah, absolutely. So, I mean, stepping back in time, 2013, ITFA and the ICC introduced the Uniform Rules for Forfaiting, or commonly known as the URF 800, created for trade transactions in primary and secondary market. Can you talk about these rules to start off with and what they govern?
Yeah, so the rules were governing effectively what was called the forfaiting market, which was the discounting of, in essence, promissory notes, future promissory notes, which quite often an exporter would obtain from an importer, allowing the importer to delay his payments over a number of years, giving up, forfeiting his right to withhold payment, and the importer would then be able to sell those promises at a discount to a forfaiter, a primary forfaiter, who in turn would be able to sell those promises to other parties in the secondary market. And these rules created the primary and secondary market rights and obligations of parties.
So why do these rules need to be updated, and what is the electronic payment obligation, which we hear about time and time again?
Well, you sort of answered the question. The electronic payment obligation was really not foreseen even in 2013 when we wrote the rules. And consequently, we could have updated URF 800 to, if you like, create an e-URF, an electronic URF. But ITFA took the view that in fact it would be better almost to revolutionize how you dealt with the transfer of a digital payment obligation by creating the uniform rules for transferable electronic payment obligations. And you have what I call URTEPO, dealing with the transfer, not the creation of those digital promises.
So just to clarify, what are the key differences, or rather, what does the URF 800 cover versus the URTEPO?
URF 800 will cover and continue to cover paper transactions. And remembering there's an awful lot of transactions that are actually evidenced by promissory notes, bills of exchange in paper. You can still happily use URF 800 for that. But as the world is evolving, as you've said, we're getting to electronic, digital payment obligations. When you want to transfer those digital payment obligations, you now have a set of rules that govern how those can be transferred.
Yeah, and how do these rules relate to perhaps some of the other uniform rules governing international trade, such as, let's say, the UCP 600 or the URDTT?
Well, UCP 600, rules governing promissory issuance of letters of credit. A promise under a letter of credit from an issuing bank or a confirming bank that is evidenced digitally, that can now be transferred using URTEPO. URDTT is, if you like, a completely revolutionary system. What it looks at is how you evidence in a digital format by an electronic record a trade transaction between a supplier and a buyer. What that generates is an electronic payment obligation of the buyer to pay, which might in turn be taken over by a financial service provider, an electronic payment obligation, which we can now transfer using URTEPO. they fit together in this new digital world that we're talking about.
Got it. Thank you for connecting the dots. So just on a practical level, what impact will the publication of the URTEPO rules have on market participants, say lenders and borrowers?
Well, it will have an impact on anybody listening to us who is involved in a trade transaction, i.e. they start with the commercial parties, the supplier and the buyer, and those who want to be involved to acquire that promise to pay, use it as security, or trade it. So all of those parties will see that if they move to a digital payment obligation, there are now rules that deal with how that payment obligation can be transferred.
Yeah, got it. And are these rules legally enforceable?
As rules, they need to be subject to a governing law. Would they be subject, if they were subject to English law? Yes, they will be. So you need a legal system that will recognise electronic promises, electronic signatures, and as we'll see in the UK, will recognise the digitalisation of a promissory note or bill of exchange, which the English electronic trade document bill, soon to become an act, will do.
So just kind of summarising that, in the case of the digitalisation of trade and trade finance, a lot of the exciting news we've seen recently are all around the acceptance of promissory notes or electronic promissory notes and electronic bills of lading, bills of lading. Am I right in saying the URTEPO will really be helping facilitate that or those products?
Promissory notes and bills of exchange, yes. Bills of lading, no. That will be part of another, if you like, another initiative. But it's all part of facilitating a move into the digital trade world and complying with the laws as they come out that will recognise how you can create and then transfer the newly created, if you like, digital promise.
Thank you, Geoff. And final question, what practical steps can practitioners take to help them prepare for these rules and when can they be used?
You could use the rules today. ITFA has an initiative, the Digital Negotiable Instruments Initiative, creating electronic payment undertaking. You can take that electronic payment undertaking and sell it under the rules. So what I'm saying, as of today, we've published rules. Read them, use them, build them into your contracts, and therefore, hopefully, have shorter, simpler contracts and just move us further into the digital trade world.
Thank you very much, Geoff. Such a pleasure speaking to you, and really good to have you and speak to you at the ITFA Christmas seminar.
Thanks very much.